Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, May the 28th. The year's 2021. Let's talk trading. It's time for the weekly wrap up. Basically, it's the last real trading day of the month. I do believe Monday, the holiday, is not going to be much, but I mean, we do have Sunday/Monday, so it's not quite the monthly wrap up. So, as always, these videos are for educational purposes only. Your results may differ from mine. Looking at the week, we've had two gaps that have not filled. The pound is up 37 pips above the weekly open. We're off 39 off the high and 89 off the low. So there's definitely been some movement, and it looks like we're going to close inside that upper wick zone, barring some unforeseen circumstances. If you notice today, we dipped back into that weekly opening range, and you can see we're now 10 pips above it. We are 539 pips above the yearly open, now 538. We are inside of the inside bar that happened 6 days ago, and you can see we tested that level a few times. For today's range, we only have 72 pips. 4 pairs are over 100. And it looks like we're creating an inside bar. No surprise with the weekend holiday or holiday weekend coming up here. We took out the pivot. We're 17 pips below the open. And the rats have been feasting. Green rats had a couple of nice bounces. In fact, I was on the phone with Walmart earlier, and as we were talking, I said that I had missed the trade out of the 40. Well, then as we're talking, I'm not looking at the charts, and then I missed another trade, a launch out of the 40s. So shame on me. As I mentioned earlier, we did take out that pivot. The daily pivot taken, the weekly pivot, and monthly pivot have all been taken out. And we take a look at the H4, even this H4 pivot was taken out earlier. Wick zone, price in and out of the upper wick zone. The range, this is where it gets kind of interesting. You can see the weekly range is at the 1% level. Not much of a range here. We didn't break out of the previous week's high, and we didn't break out of the previous week's low. High minus close, that's 39 pips off of that high, now 37. Close off the low, 90 pips. So you can see the rats were rewarded at the weekly level. And the day range, high minus open, is only 10 pips on the daily. So once again, compressed ranges, maybe next week will pop out. We'll just have to wait and see what happens. And looking at the Walmart, we just had a Walmart trade trigger here, 1 pip to the good if you're trading this hour. Now 3 pips to the good, just put in a 1 ball. And we could just sit and watch this for a while, because I know there's still some traders out there still struggling with the Walmart method. I really don't know what some of you guys are trying to do. Walmart's been doing this for I think over a year, because I've been doing it with him for over a year, and he had a lot more seat time in it than I have. Point being, you need to learn the method before you start messing with it. It's just that simple. Um, Only after you get some seat time are you going to be able to see some things that maybe are unique to to you and what you see and how you trade. But before that happens, before you've got, say, I don't know, at least a full entire month of trading, um, don't change a thing. Don't try to anticipate the entries or the exits. Just trade it, and you should be rewarded. I mean, right here, you'd be up 7 pips. You've got 4 pip breakout of the previous H1 high. I mean, that's pretty much all you have to do. It's not that difficult. Trading with the H1 candle color, trading with the M5 candle color. I mean, you really, really, really don't have to do anything other than that. Um, and so I'm not really sure the reason you guys are trying to reinvent the Walmart wheel. Um, Even when it gets down to, your risk management is your risk management. It doesn't matter what method you trade. That is independent of your method. Remember, I talked about the three-legged stool. So you have to have your risk management in place before you even pick a method. You need to know how much you're willing to lose per trade, per session, etc., long before you put that trade on. So the method doesn't matter. Now, what the method might dictate is you might have a stop loss, a huge stop loss. Well, then all what happens is you trade smaller lot size, but you maintain the risk. Um, and I know you guys have seen the charts, but let me just put it up there one more time for you. Risk management, the dollars or percent of your account that you're willing to lose on any one single trade. So if your method dictates where you place your stop loss, then you have to calculate your position size every time you do. Or if you're having a same position size, then your stop loss is going to be the same amount of pips away from your entry. It's real simple stuff. Nothing more, nothing less. That's what you have to do. And then on the money management side, once again, you can have things laid out like the 10-5-1. But the thing is, if you see price stopping and you're up 3 pips and it just stops and sits there and it was going up, well, it could continue to go up or it could reverse on you. You don't know. Just take the pips off the table. Yeah, it'd be nice to get 10 pips on the trade, but, next time Walmart's on, just say Walmart, how many times you make 10 pips versus how many times you make 5 or less? I think the answer is going to be obvious. But that's what you have to do. And you will, get used to that once you start trading the method. And we've got, the ranges. Here we know what it usually ranges per hour. Right now it's up to 21 pips this hour. So it's all laid out for you. You don't have to do anything different. I mean, here, what happened? I usually don't trade that first 5 minute bar, even though the previous one did it. Maybe I did. Maybe you got stopped out. Maybe you went back in. But that's, once again, that's all part of how you trade. And so here, this was a first touch to the downside. Walmart would have most likely would have ignored it. So he wouldn't have been in that trade. He probably would have been in this one or this one. But it's not that difficult. And you don't need to add anything else on here. I mean, yeah, I put some things on there because I was experimenting with a few things with these little arrows. That's just basically, it just tells you if the mid dot closed higher or lower than the previous mid dot is pretty much all what those arrows are telling you. And it's funny because I saw this formula and then I got to thinking, I go, well, wait a minute. If I divide that by 2, then that's the mid dot. And then actually what it's telling you is the current mid dot above or below the previous mid dot is actually more accurately describes what's happening there. So as you can see here, this mid dot, current mid dot is definitely above the previous mid dot. But I thought that was kind of funny that somebody else pretty much used the same formulas I did for a bias indicator. I guess what, great minds think alike? Something like that. Anyway, so I don't know how else to say it, but other than just don't try to monkey with this method and before you learn how to do it. You have to master the method as is before you can really make it your own. You need to learn the rules inside and out. You need to follow it. And you just have to have the discipline to do that. And the only thing that makes having the discipline tough is you. It's your belief system. It's, your biases, your previous experiences. And that's why you have to do that Bruce Lee, empty your mind, and then be like water. There's a lot of wisdom in that. And the main thing is that if you do that, then you take you out of the equation. And you're just following the method. You're following what's there. But once you put you in the equation, that's when things sometimes start to get messed up. And that's just how it is. Because it's real easy to get emotional and to get mad and then not do what the price is telling you to do. And then after a while, you'll develop a feel, you'll develop some instincts. And then you'll know that, hey, that might just be your subconscious telling you, hey, you know what? You better be careful here. You better check that trade because it could, bite you. So anyway, fellow traders, I hope you've had a profitable week. I hope you've enjoyed the videos. And I wish you a fun and safe holiday weekend. And next week when we do the wrap up the month, and I'm thinking we might take a little bit different tact in the trading videos. We do spend a lot of time on the philosophy. I think there might be some people, they might want to get into more nuts and bolts. But the thing about it is, it's just horizontal lines. So, traders, and just looking at another set of horizontal lines here, the highest low. You can see price dropped out of there, put in a one ball, starting to try a retrace. Fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.